As we continue seeing shifts in the real estate market, we're starting to see more and more buyers being able to negotiate lower sales prices with sellers than we were the last few months. So this is a good opportunity for them to get a better deal on the home. And instead of going in and asking for a reduction in the sales price, a great strategy to use is to instead ask for that same dollar amount, but towards a reduction in their interest rate for their mortgage. You can do this by asking for a seller concession to go towards the buyer's discount points, the same as you would as a seller concession for closing cost credits. So I'm going to explain the math today and why it's a huge financial benefit to the buyer if you do this. So take, for example, a home that's selling for $750,000. The buyer's putting 20% down for their down payment and getting, which is $150,000, and they're getting a mortgage for $600,000. If you're in a position where you're able to negotiate, say, a $6,000 reduction in the price, that's great for the buyer. It's going to save them about $34.38 per month on their mortgage. So not bad. If you're getting an even bigger reduction, say of $12,000, in that case, the buyer's going to be saving $68.77 per month on their mortgage. I'm sure they won't be mad about that. And as an alternative, we have another strategy you can be using. Instead, you could ask for the seller to pay points towards the buyer's mortgage to permanently reduce their mortgage rate and their mortgage payment. So a point is a one-time fee that gets paid at closing. The benefit being you get a lower interest rate for the life of your mortgage. So you're saving interest over all 30 years or for however long you have that mortgage for. So instead of getting the price reduction, you can instead ask for the seller to give a concession to the buyer, similar to a closing cost credit, but in this case is specifically towards discount points for the buyer's mortgage. So instead of getting that $6,000 price reduction, you could ask for a $6,000 towards discount points for the buyer's mortgage rate. 1 point is always equal to 1% of the mortgage amount. So on a $600,000 mortgage, 1 point is $6,000. So for the same $6,000 cost to the seller, the buyer is now buying down their interest rate by about 0.3% for the life of the loan, which saves them $154.42 per month. If you're doing the $12,000 reduction, again, instead of getting the $12,000 off the price, have that be applied towards the buyer's discount points, because 2 points is equal to 2% of the mortgage amount. So in this case, $12,000 for this example, they're now saving $256.16 per month on their mortgage payments. Huge difference compared to the price reduction. All right, so now let's compare these options side by side. So in this column, we have the $12,000 price reduction. Over here, we have the $12,000 concession towards points. Again, with the price reduction, buyers saving $68 per month. With the points, they're saving $256 per month. Now, over the life of the loan, the $68 per month adds up to $24,757 that the buyer's saving by you negotiating that $12,000 lower price. On the flip side, if you instead ask for $12,000 to go towards the buyer's points, they're saving $92,217 over the life of their loan because of that lower interest compounding over the 30 years. So to the seller, again, $12,000 in both cases. To your buyer, it's $92,000 compared to $24,000. So go save your buyer and ask for the points instead of the reduction in price.